We are tracking a bunch of stories feeding into this market that should be on your radar today. Julia Boorstin has the latest news on Netflix and a big drop in Snap shares. Frank Holland covering Pepsi and Constellation earnings, what we're learning there. LeBeau has more on Tesla's tumble, and Lauren Hirsch is tracking retail and the U.S. consumer. Julia, let's start with you. And before we get to Netflix, we just have to talk about some big and, to me, surprising news out of Facebook. They're, it seems, copying yet another of Snapchat's main features.
That's right. Facebook announcing a new app. It's called Threads by Instagram. And this new app is designed to make it easier for people to message their close friends from Instagram, to share photos, videos, etc. It's really camera first, very similar to Snap. And the idea is that if you look at Snap's success, a lot of what has really driven its growth is the idea that people have their close friends there and they communicate frequently on a daily basis, not with a bunch of their friends, with hundreds and hundreds of people, but really with their close network of friends. So remember that Instagram has about 500 million daily active users. So we've seen Snap shares fall dramatically. Snap shares are off about 6%. Meanwhile, Facebook shares are up about 2.5% on this news. Of course, the question is whether or not this will actually eat into Snap's numbers. You see Facebook shares now up over 2.5%.
Oh, yeah, and especially for them to do this at a time when they're under such scrutiny is fascinating. Well, we'll continue to follow that, but I also want to ask you about Netflix, which Jim Cramer this morning joked he was kicking out a FANG. He said it's going to be GFAM. Microsoft's in, Netflix is out. The stock is down 30% the past 3 months, and everyone's saying this is a make-or-break quarter they have coming up.
Well, that's right. Today, there were two analyst notes out today moving Netflix shares. They were down as much as 2.5% earlier today. Right now, Netflix shares are down about 0.8%. So Bank of America Merrill Lynch, which has a buy rating on the stock, issued a note saying that heading into Q3 earnings, this will be a make or break quarter for the company. Of course, this is in the wake of a 25% plus sell-off since disappointing subscriber additions last quarter in Q2. Another analyst note, Needham analyst Laura Martin, with a hold on the stock, she issued a note saying Netflix must lower its entry price because of competition with Disney and Apple's lower priced options. She predicts that Netflix's U.S. subscribers are at risk if they don't introduce some new price points. She recommends the company introduce a new $6 a month service subsidized with ads. Now, she says that's necessary because Netflix's balance sheet can't withstand any larger cash losses. Of course, the big date to watch for Netflix is October 16th. That's when they report their next quarter of earnings. Kelly?
$6 a month with ads. I'm telling you that DVR is looking better and better. Julia, thanks very much, Julia Boorstin. Let's move on, talk some Pepsi, shall we? Those shares are rising today on a big earnings and revenue beat for their third quarter. The CFO saying he's bullish on the consumer. We also have shares of Constellation Brands, and those are sinking even though they had an earnings beat because of their exposure to cannabis, a $400 million loss on their position in Canopy Growth, weighing on minds today. Frank Holland is here with more on all of it. Just first of all, Frank, on the strong consumer, an important message given the market concerns today.
You know, both of these companies had a really strong message about consumer spending. However, we're seeing different performances when it comes to their stocks. For Constellation, beer sales are up for the 38th consecutive quarter. Overall sales up 5.3%. It's Modelo Especial growing 15%. That sales growth led to a 12-cent earnings beat. CEO Bill Newlands expects beer sales to grow by high single digits for years to come. That's what he said. The company raised earnings guidance on the bottom and the top end of the range, but investors are apparently concerned about those Canopy losses that reduced EPS by 20 cents this quarter.
Wow.
Shares falling right around 5%. Pepsi on pace for its best day since July of 2018. Strong consumer demand powering Pepsi's beat on revenue and EPS. Sales beat estimates by almost 1%. Gatorade and the introduction of Gatorade Zero, a big factor there. Pepsi CFO on CNBC earlier today saying the consumer is actually doing just fine despite all the hand-wringing. Here's why he said so. In North America, Pepsi, Frito-Lay, and Quaker Foods all reporting growth. Internationally, Europe, Africa, the Middle East, and Asia reporting 5% growth or more.
Now, I know people will say, look, it's lagging. By the time it catches up with Pepsi, it's too late and so forth. But it is so important to check in on the consumer. And if they're seeing any signs of a deterioration in demand, of people trading down to cheaper alternatives or you know, I mean, the traditional signs of distress, and we're just not, it sounds like we're just not seeing that.
Well, especially when it comes to Pepsi, you're not seeing it. Gatorade Zero, it came out last year. It's a brand new product. So if people feel like their money's a little tighter, they don't want to pull that dollar out their wallet, they generally don't go to new products. And also with Modelo Especial, that's outside of their core business of Corona. That's their big seller. So to see people try new products and those seeing that kind of growth, it is a sign, at least for now, that consumer spending is strong.
True. Frank, appreciate it. Thank you, sir. Frank Holland. Next up, Tesla shares. You know, we had the whole market rebound today, but not Tesla. They posted record numbers, but did fall short of estimates on deliveries. Phil LeBeau is in Chicago with more. And Phil, as I mentioned, the stock down about 6% and kind of sitting around those levels right now.
Right, and the stock's under pressure because people are wondering, is there a demand problem when you look at the Model 3 in terms of deliveries that we saw in the third quarter? Overall deliveries, yeah, they fell a little bit shy of expectations, coming in at 97,000. The street was expecting 99,000, so it wasn't a huge miss. This is why we're showing you the chart. That gray area at the end there, that's 105,000 vehicles. That's what Tesla needs to deliver in the fourth quarter in order to hit the very bare minimum in terms of delivery guidance of 360,000 vehicles this year. We have seen a number of analysts who have trimmed their delivery estimates for the fourth quarter, particularly for the Model 3. They're concerned that perhaps we will not see the level of demand that we originally thought, or people originally thought, and also what's going to be happening in China. JMP Securities also out with a note today. They downgraded shares of Tesla, and they raised this entire question, Kelly, about whether or not could they have delivered more vehicles if there was greater demand. They point out there is nothing that was obvious. There was no indication that they were having delivery issues. Therefore, they had the vehicles. They should have been able to make deliveries if there was demand. Again, that's the theory right now. If you're somebody who's looking at Tesla shares and saying, not entirely sure I buy the optimistic outlook.
Yeah, no, it's been a battleground this year, although obviously the stocks have been under pressure with the big fourth quarter ahead of them. Phil, thanks. Appreciate it very much. Phil LeBeau there. Finally, with the trade tensions, weak data, and a spate of bankruptcies all weighing on the retail sector, department stores have taken a real beating this year as well. Just look at Nordstrom down 32%, Macy's down 50%, and some new holiday projections today. Let's bring in CNBC retail reporter Lauren Hirsch. Lauren, what are they saying about the holiday season? Is there any sign that all of these macro concerns are catching up with the consumer for the NRF?
So it's a little hard for people to gauge, right? Because they actually have fairly positive expectations, but they're also saying it's the most uncertain environment they've ever been in. So even though, you had the CFO of Pepsi this morning saying the consumer is still strong, well, that's today, what's tomorrow? When every day news is breaking and rattling the market and rattling the consumer, you don't know when that's going to flip.
Right, and there's still this uncertainty about the timing of tariffs on October 15th and December 15th. And are we seeing a lot of shifts in terms of people pulling inventory forward or trying to do, kind of ensure that they'll have stuff at the right price point? Because raising prices on the consumer, as Macy said earlier this year, they think is going to be really difficult.
Exactly. So from a supply chain perspective, you're seeing companies prepare, and they've been preparing for a while. But if you're a department store, if you're Macy's, Gannett, he came out and he said, listen, we tried, we raised prices, and the consumers didn't want them. That's a really big problem. These big department stores are investing in e-commerce. They have slowing store sales. They can't risk their margin anymore, and it looks like the consumer is not going to be the one to eat the price.
Right, although it probably says more about them than the consumer. I mean, if it's Lululemon, my guess is they're going to have no problem selling a $99 item for $106.
So the weaker will get weaker, and the stronger will get stronger.
Right, and we'll see who emerges after it's all said and done. Lauren, really appreciate it. Thank you,
Thanks,
Lauren
Kelly.
Hirsch.